Welcome to part 3 of this series. And in this final segment, we're combining RSI, Bollinger Bands, and a powerful third tool, the average true range, or ATR. If RSI shows momentum and Bollinger Bands show volatility extremes, ATR gives us one of the most important things in trading, measured risk. And when all three work together, you don't just get a signal, you get a complete trading system. Let's start with the role of ATR. ATR tells you how much price is moving on average over a defined period. It doesn't tell you direction, it tells you volatility. This is crucial for setting realistic stop-loss levels, timing entries during high-probability breakouts, avoiding trades during dead, sideways zones. Now, here's the advanced synergy. 1. Entry filtering using ATR. Let's say price touches the lower Bollinger Band. RSI is under 30 and turning up. Looks like a bullish reversal. But what if a TR is extremely low? That means price isn't moving enough to justify a trade. Even if you get a signal, it's a dead market. You'll enter a trade and just sit there. Waste of capital. Solution: only take trades when a TR is above a certain threshold. For example, above the 20-day ATR average or rising in slope. This confirms that volatility is expanding with your momentum signal. 2. Stop loss and take profit using ATR. This is where ATR becomes your best friend. Once you confirm a trade using RSI and Bollinger Bands, calculate your stop loss using ATR. For example, if a TR is 35 pips, set your stop 1.5x ATR below your entry for longs. For take profit, target 2x or 3x ATR, depending on structure and risk appetite. This makes your trading adaptive to market conditions. In low volatility, tight stops. In high volatility, wider stops, but with more room for the trade to breathe. This is far more effective than using fixed 20 or 30 pip stops. 3. ATR as confirmation of breakout strength when Bollinger Bands squeeze. It signals low volatility and a potential breakout. But which direction? That's where RSI and ATR come in. If RSI breaks above 50 and ATR starts rising, that's a bullish breakout confirmation. If RSI breaks below 50 and ATR spikes, bearish momentum is likely to follow. This 3-indicator combo tells you where the pressure is building, which side has momentum, whether there's enough volatility to move. It's a professional-grade setup, not a guess. Example setup. On your USD 1-hour chart, Bollinger Bands contract tightly. RSI begins rising from 40. Breaks above 50. ATR rises from 25 pips to 40 pips in the last 3 candles. Price breaks upper Bollinger Band with bullish volume. This is your high-conviction breakout entry. You set your stop 1.2x ATR below the entry and target 2.5x ATR to let the trend run. Result: you avoid chop. You enter on strength. You manage risk dynamically. Final tip: indicators sync. Want to automate this combo? Use TradingView alerts or EA logic. Bollinger Band squeeze condition: RSI crossing 50. A TR rising above recent 14-period average. Only when all three align, your bot or alert triggers. That's how you trade with precision, structure, and edge. If you're serious about building a system, not just reacting to charts, you need to test and refine these combinations in real market conditions. That's what we do at Innohedge. Join us and get access to ready-to-use RSI plus B plus ATR templates, full back-tested strategies, trade review sessions, and a community of strategy-focused traders who use indicators with intent, not guesswork. Join Innohedge now and transform your strategy into a system that scales. Because trading is not about finding more indicators, it's about using the right ones, the right way.